Hello guys, welcome to My Finance Teacher. We are talking about crude oil and natural gas at the moment. So looking at weekly chart of crude oil, what do we see on this chart? We see that this intermediate cycle in crude oil has started the declining phase. Price at the moment is below the 20-week moving average. What else do we see on this chart? We see a negative divergence. Price has made a higher high over the last several months, whereas RSI has not confirmed the higher high, which gives us a negative divergence, which generally indicates that an uptrend is being broken. So we're going to most likely slide down on the crude oil, especially given the seasonality. With the driving season finished and winter still far away, spring and autumn are usually the time when demand for gas in US cools down and the stockpile of crude oil as well as other petroleum products in US, they increase. That might be accompanied by a declining price of crude oil. So for all of those reasons, I expect crude oil to cool down until, well, at least until November, and I see a support zone formed by a couple of previous highs somewhere in the low 50s. Here is a chart of stockpile of crude oil and other petroleum products in thousands of barrels in US, and just as I mentioned, the driving season is over and the stockpile is increasing. This chart is from the EIA, Energy Information Administration. Another chart from EIA is about natural gas, and I want to talk about natural gas as well. This blue line is the stockpile of natural gas in US, whereas the darker lines here is the 5-year average, as well as the maximum and the minimum ranges for the 5-year average. We see that this year, although the stockpile of natural gas is growing over the last few months, actually at the moment it's below the minimum it has been over the last 5 years. So crude oil stockpiles are growing, natural gas stockpiles are growing, although not as fast. And in relation to the price of natural gas, it seems that every winter there is a nice spike in the futures price of natural gas. It actually would be nice to catch a spike like that, isn't it? Of course, one would say that it's not easy, and it's not. Even if one were, for example, to buy somewhere around here at the end of October, thinking that that is the low just before the spike, that would still give relatively nice gains, given that the investor doesn't panic sell whenever the price moves below the entry point. So buying at end of October, say somewhere here at about, well, let's say $2.85, and waiting until January and selling, say, at even a $3.4, that would still give us about 19% gain on the futures price. That's without catching the very bottom and the very top of the price range. So I think it looks interesting, although in the meantime I'm waiting for both crude oil and natural gas to cool down, and I'll revisit this topic somewhere in late October. Until then, remember to subscribe to the channel, hit the like under the video, tell me what you think in the comments below, and have a nice day.